to the END's event this evening, which is Access to Finance, in partnership with Leeds City Region Enterprise Partnership, and Melissa's representing the LEP today, and also Cedar Court Hotel. We've got a fantastic panel lined up for you with some really top-notch speakers and top-notch organisations. The plan is to for each of the speakers to give a brief presentation on their particular subject matter. And then after that, we'll have a panel session open to the delegates to ask questions on any of the subject matter that we've discussed during the course of the day. I'd like to invite Natwest Bank in the form of Faisal Khan and Elizabeth Smith, who I'm sure will introduce themselves.
Thank you. Good evening, ladies and gentlemen. My name is Faisal Khan. I'm a relationship manager from Natwest Business Banking in Bradford. And my colleague Liz Smith is a relationship manager for the Natwest Business Banking in the Keighley and the Yorkshire Dales area. I'm just looking back to make sure that I'm not blocking your view or anything. So first of all, I'd like to thank Yorkshire Enterprise Network for giving us the opportunity to present this evening. The plan for this evening is Liz and I just want to talk to you guys a little bit about some of the your sort of typical business banking finance facilities that normal banks would offer, and then also touch on some of the non-bank finance which you may be interested in out there as well. So just going straight into this, small business loans, typically these are kind of your, well, the clues in the name, small lending, anything up to £35,000. Typically, the small business loans are unsecured loans, so you won't need to offer any security over tangible assets, etc. If you are a limited company, you may need to offer a director's guarantee. Our small business loans usually are a fixed rate product. Now, when we say fixed rates, what people normally feel is that with it being a fixed rate product, if you did want to repay the loan earlier or pay chunks, then you may have to incur a penalty. Our products are quite flexible in that sense, where if you did apply for, say, £30,000 and you wanted to pay off earlier, then there's no penalties that we charge. In addition to that, the other sort of attraction here is that a lot of banks charge an arrangement fee for business loans as well. Well, there's no arrangement fee with NatWest and a few other banks, so just look out for that facility as well, because you can save up to 1.5% in arrangement fees on that side as well. And in terms of the term, you can borrow up to £35,000 for anything up to a 10-year term. Moving on, commercial mortgage. This year, I've lent around £1.4 million so far. Majority of the deals that I've completed this year and last year, and looking at the pipeline that I've got that I'm working on at the moment as well, most of my deals have actually been commercial mortgages, commercial property purchases. So typically, this is where you'd have a business either looking to acquire the premises that they currently trade from, or if they're looking to acquire a second premises, or just look to buy your first premises altogether. So this is where we can provide some support. You can borrow anything up to £500,000. Once again, similarly to what I mentioned before with the small business loans, there's no arrangement fee to pay with NatWest Bank, and I know there's a couple of other banks out there who are also offering a similar sort of a service as well. So as an example, if you're looking to borrow £100,000, typically the arrangement fee on anything of that amount will be 1.5%, so you could save around £1,500. The other thing is you can choose between a fixed rate or a variable rate on a commercial mortgage as well. Very similar to the small business loans. If you do decide to go for our fixed rate product, it's actually a very flexible product where if you did decide, if you're in a 3-year fixed rate, for argument's sake, and you wish to pay chunks off the mortgage, there's no penalties to pay if you wanted to do that. At the present, we're offering a 3-year fixed rate, a 5-year fixed rate, and a 10-year fixed rate product. But some clients may also choose to go for the variable rate option if you feel that's more appropriate for your particular business. The other thing that we also offer is capital repayment holidays, where As an example, you may come across a scenario where if you're looking to buy a new premises for your business, but it needs a little bit of work doing, it might take you 3 months or 6 months to refurbish the actual property. We will draw down the loan so you can purchase the property, but then we will provide you with a 3-month or 6-month capital repayment holiday as well, so just to sort of allow you, a bit of flexibility and a bit, just to help your cash flow a little bit, so you can start actually paying the full capital and interest once you're, fully inside that particular property. Business overdraft, most of you have heard. I'm not trying to teach you all to suck eggs, but it's kind of, just your simple overdraft facility. People use overdraft facilities either to plug any cash flow gaps that you might have, any funding gaps. I've arranged some overdrafts for businesses to arrange some stock finance as well. But with the overdraft facility, typically you'll be looking to pay an arrangement fee annually. The business overdrafts are usually committed for a 12-month period. So at the end of the 12-month period, you'll have a meeting with your bank manager. We'll sit down, we'll go through your business activities for the last 12-month period. We'll have a look at your financial accounts, and then we'll look to renew the overdraft facility again for a further 12 months. And upon renewal, every year there's a 1.5% arrangement fee that we'll charge. You only pay interest on the overdraft if you are actually using the overdraft. So if the overdraft is just there as a safety net, then you won't be paying any interest on that. And I'll just pass on to Liz, who will talk to you about asset finance, and then I'll come back again just to talk about some other bits of finance as well. Okay.
Yeah, hi everyone. I'm just going to cover off asset finance. Again, like Faisal says, you've probably all heard of these products, but it's just a little bit of a refresher. So if you are looking in your business to finance any plant, machinery, vehicles or technology, asset finance is a real good product to consider. With the asset finance, it can complement your other lines of finance that you've got from the bank already, so like an overdraft and loan. For example, if you are looking to finance vehicles, a couple of options. Hire purchase might be right for your business, where you actually own the vehicle at the end of the term, and you'll pay a deposit at the beginning, you'll have fixed monthly repayments, and then, like I say, if it suits your business, you own it. Some businesses may prefer the other option, which is actually contract hire, where you just basically renting the vehicle. And again, with your fixed monthly repayment, you can get your maintenance included in that, and your servicing. So it's very good for your fixed costs, so you know exactly what you're paying. And it is quite flexible with it being contract hire. Oops, do that one. Yep. With the plant and machinery, basically you can use asset finance for any plant and machinery, pretty much, as long as it's movable, basically. Small printing press to an entire production line. And again, it is a real flexible way of purchasing these items. At the end of the term, there's lots of options for you. You can sit down with your accountant, with your bank manager, and decide what you want to do with that machinery. Helps your cash flow. We do come across a lot of businesses that may have a little bit of cash in the bank, and they choose to buy the plant and machinery outright, and then they hit cash flow problems. So it is really good planning to think about putting your plant and machinery on the asset finance. It can also be tax efficient. Again, Natwest uses Lombard, they're part of our group, so they will talk to you about the tax benefits, and your accountant as well. And also, as your business grows, normally you would need more machinery, and again, it's very flexible, so you can return to asset finance as many times as you like. I recently, one of my customers, they funded their coach through the asset finance. What you do find, if you're buying a big item, you often have to pay the VAT up front, which can mess up with your cash flow. Again, the banks can help you with that, so we can do Vat Loan, which is just a short-term loan, and at the minute there's no arrangement fee for the Vat Loan either, so it's we can do the full package. Yep, so I'll just move back to Faisal. He'll just cover off the next slot.
So just to talk about a couple of other options that we have available. Anybody heard of invoice finance factoring? Okay, not very many people. Okay, so I talked about the overdraft facility to help you with your cash flow. Okay, the overdraft facilities are mainly sort of more for customers who are smaller scale. Okay, and small scale cash flow issues. The invoice finance is more targeted towards sort of businesses that are growing. Okay, so I'll give you, I think the best way to describe how what invoice finance is if I give you a typical scenario, an example. So let's say for argument's sake you're a business and you're B2B, okay, and you've got a debtor book, and let's say you have 10 customers for argument's sake, and you're owed in on your debtor book around £100,000 spread across 10 debtors, and the funds are due in 60 days for argument's sake, but you're in a position where you need to pay your wages now, and you've got a tax bill to pay right now, and you've got other suppliers that you need to pay right now. So you can't wait for 60 days for this money to come in from your debtors. So with invoice finance, what you'll then do is you'll contact your invoice finance provider, and you can actually draw down up to 90% of your debtor book within 24 hours, which will then enable you to make your payments. And then what happens is when the debtors pay you what's owed to you, your invoice finance will then get repaid. Now, within invoice finance, you can have either factoring or confidential invoice discounting. With confidential invoice discounting, typically that's where you control your debtor book and you can chase your debtors yourself. With factoring, the invoice finance company will help you manage your debtor book and contact your debtors to collect the funds in. Anybody heard of EFG, Enterprise Finance Guarantee? Okay. I know, Phil, you're an ex-banker, so I know you haven't. Okay, so I spoke previously about the unsecured loans, the small loans, and then I also spoke about the commercial mortgages. So the commercial mortgages, obviously, will take security over the target property that you're looking to buy. So customers from time to time come across a scenario, businesses come across a scenario where you're looking to borrow, for example, let's just use round numbers, £100,000 towards growing and expanding your business. So once, as a bank, we've done all of our assessments and we're quite satisfied that you meet the bank's criteria and you meet affordability and everything's fine, and we're looking to support you with your request. But the only place where we feel there's a gap is you don't have enough security to offer, okay, to secure that particular lend. This is where EFG could be of interest to you. EFG is a government scheme, and it's managed by the British Bank. So we work very closely with the government organisation, and the way it basically works is if you're looking to borrow, let's say for example £100,000, but you don't have any security to offer, then through EFG you can secure 75% of your loan. So as a result of that, you then pay a 2% fee to the government annually for that particular service. I'll now pass back to Liz to talk about some alternative finances other than banks.
Thank you. Yes, so just we were asked to cover non-bank finance as well, because there's lots of options out there for everyone. Natwest, we are committed to helping British businesses grow. As we've gone through, we've got a range of lending products, as have most of the other high street banks. And all our lending products can be used in conjunction with funds like the Enterprise Financial Guarantee Scheme. But if traditional banking is not appropriate for you, we can try and help you understand some other options. So, as we've said, some businesses, they can't access, or it's not appropriate to go down the bank standard lending routes. What we do at NatWest, we work with partnerships like the Business Enterprise Fund. If we can't help, or we think there's something more appropriate, we will pass you on to someone who we think can help you. So just to mention a few that we're coming up with now, some of our customers are choosing to use these other forms of finance. I'm sure you've all heard of them. But crowdfunding, that's been around quite a while now. You normally access crowdfunding through the internet, and it's just where a pool of people put perhaps small amounts of money in, and the money's all pooled together and then actually lent out to businesses. As I say, you can access most of that on the internet. Equity finance, sometimes called business angels, that's typically like your Dragon's Den scenario. So it's not right for every business, because you get your funding in, but you're often giving some of your business away by shares, and that is a big thing for people to do. But again, if it's a type of business where you really want to grow rapidly, so I think Fillmore and Union, I think they read that they did something similar like that, the restaurant chain, because they quickly wanted to get more units. And obviously it all costs money. So for the right type of venture, that's out there. The peer-to-peer lending, we are finding a lot more customers are looking at this for various reasons. This is generally where, it's probably because as well, there's like quite a lot of cash-rich people and businesses around at the moment, but they're not getting a very good return on their monies. So what they're choosing to do is invest their money into a peer-to-peer lending company, and that company will then lend that money to local businesses. The way it's sort of funded and how everyone benefits, the investor puts the money in, the company then lends it out at a rate of interest, and normally the investor would get all that interest back. So if they're charging it out at 6%, you may get 6% back on your return. And you do pay fees for this type of lending, and then it's the fees normally go to the company. So a couple of ones out there at the moment is a Funding Circle, which you've probably heard of, and folk-to-folk lending is another one. But we are finding it is a lot more people are looking at that. I've just put up there friends and family. Again, don't forget friends and family when you're looking at other forms of finance and support. We do still get a lot of people who, especially if they are looking to buy the property and they're struggling with the deposit, you know, the family are prepared to give them a help up on that, and it can be a bit more flexible and not as much pressure initially when you're taking on an extra loan. So it was only a quick snapshot. Hope that we've sowed some seeds of what is available out there. I did mention the Business Enterprise Fund. We do work quite closely with them at the bank, because all the finance that we've gone through today, it's not either or. So you can have traditional bank lending, but then complement it with some of the non-bank finance. Do look at our website. I've put it down there, but it's a really comprehensive website for lending, borrowing for your business. It not only shows you our products, but it shows you other banks' products so you can compare, and it does go into a lot more detail on the non-bank finance as well. So thank you very much.